Hey guys, a very good morning, afternoon, or even evening from where you are in the world. So in today's session, I'm going to be explaining what Fibonacci is and essentially what a Fibonacci retracement is and what a Fibonacci extension is and how to profitably use them when trading. So yeah, without further ado, let's just dive in and let me explain everything you need to know. So to begin with, both Fibonacci retracements and extensions are very popular among technical traders and are essentially based on a fixed number of rules identified by Leonardo Fibonacci in the 13th century. So regarding how Fibonacci levels were founded and how they work, this is essentially all you need to know. So let's start off with Fibonacci retracements. And Fibonacci retracements in technical analysis are created essentially by taking two extreme points in price. So in an uptrend, this would be a swing low towards a swing high. So if this were to be an uptrend, what you'll do is that you take the swing low and the swing high. So essentially the higher low and the higher high. In a downtrend, this would be inverted, and what you would then take is essentially the swing high and the swing low. So the lower high and the lower low. So that's one thing you need to remember. In a downtrend, connect the lower high to the lower low. In an uptrend, connect the higher low to the higher high. So with that said, let's move on. So the preferable levels that you want to take are the 0.382, the 0.5, the 0.618, and the 0.786. So let's show you guys how this works. So let's get a clean chart or a clean background, and let's just draw on an uptrend. So over here we have an uptrend, and that is identified by having a higher low, a higher high, a higher low, and a higher high. And now what we can do, since we've identified that, is just draw in and use our Fib tool. So remember what I said, in an uptrend, always connect the higher low to the higher high. Let me just adjust this. And in a downtrend, that's the next thing that I'm going to show you. So remember, downtrend has lower lows and lower highs. Let me just adjust this a bit like this. So remember, a downtrend is signified by a lower high and the lower low. So in a downtrend, what we're then going to do is connect lower high to the lower low. And what you'll then see is that the fib is drawn on correctly like this. So essentially what you need to know is that once these levels are identified, we can use the horizontal lines as potential levels where potential or possible retracements will happen towards 2. So what do I mean by that? Well, if we have an impulse from this lower high to this lower low, and you want to enter into the market, what most traders want to do is they want to enter on the new lower high. So in this particular situation, where do you want to enter? Well, you want to enter where the new lower high will be formed, right? Because then you will be able to trade the entire impulse back in towards the downside and trade all the way towards the new lower low. And in an uptrend, if you enter on the new possible higher high, or higher low, over here, you'll be able to trade the entire impulse back in towards the highs all the way towards the new higher high. So I hope that is all clear on how to draw in the Fibonacci and which levels are important. I'll quickly just click on this so you can take over my settings and use them for yourself. So with that done, let's dive into some real charts and show you how Fibonacci retracements work. So as you can see over here, we have the Bitcoin chart, and Bitcoin is a really nice cryptocurrency on which Fibonacci works perfectly in my opinion. So over here, what you want to do first of all is, for example, identify a downtrend. So over here, boom, boom, boom. What do we have? We have a low, we have a lower high, and then we have a lower low. So once that's identified, how or what can we then draw in? We can draw in our fib from, first of all, remember the lower high, because this lower high is a lower high from this impulse. So this is just a liquidity wick. We're not going to take that into consideration. So what you can do over here is from the lower high, you draw your fib to the lower low. And let me just delete the chart to make it a little bit more clean. Even press the replay mode for you guys. So what you can then do is you can connect the lower high to the lower low. So remember the 1 towards the 0 in a downtrend. And what you'll then see is that the Fibonacci retracement level that gets hit is the 618 before retracing in towards the lows. So in this situation, what we've now done is that we've entered, because we entered, for example, on the 618, we've entered upon the new lower high, and we have been able to trade the entire wave towards the lows to fully capitalize on the new lower low made. So once that new lower low is made, you can then, for example, once again, draw your fib on from that previous lower high towards that new lower low, which has been formed. So yeah, that is in a downtrend. Now let me show you guys an example of, an example in an uptrend. And let me just delete the chart for you guys to make it a little bit more faster. So in this situation, what we have over here, we had a downtrend, but what happened? We created a new higher low. And what you can see in this situation is that we had, and that is for another day, but we had this inverse head and shoulders over here. But essentially what you had over here, if you draw in your fib, you'll see that we had our 1, so from the low to the new high over here. Remember, so in an uptrend, a fib is drawn from the low to the swing high. So from the 1 to the 0, and what you'll then see is that the 0.5 gets hit before then once again moving back up in towards the highs. So that, ladies and gentlemen, is how you draw on a fib in an uptrend. So with the retracements discussed, let's head over to the extension levels, because once again, Fibonacci extension levels are created by taking 2 extreme points in price on your chart. So it doesn't really differ from normal retracements. However, the main difference between the two is that instead of trying to predict to which level price will retrace towards, we're going to try and predict to where price can move towards. So what potential targets could be. So once the retracement has been made, you can then, for instance, target a certain fib extension level, and that will then be your take profit level, for example. So the most important levels that I personally would recommend you to use are the -0.27 level and the -618 level. So to visualize this for you, I have over here the -27 and the -618. And in a downtrend, it's exactly the same. We're going to be targeting the -27 level and the -618 level. So once again, settings haven't changed. The settings are still the same. So how does this work? Well, in an uptrend, what you want to do, of course, remember, is from the beginning of the impulse to the end of the impulse, boom, and then boom, or even higher. So what you want to do, or how you want to use fib extension levels, is by predicting where price is going to head towards. So in this particular situation, once you have that fib retracement in towards 618, you can then use the -27 level or the -618 level as your potential target. And in a downtrend, this works exactly the same. Just draw in your fib once again. So remember, 1 is at the lower high, the 0 is at the lower low. Then once you've predicted the retracement towards 618, you just wait for either the -27 or the -618 to get hit before once again getting a new retracement. And once that retracement has happened, you have then possibly predicted the new lower low. So in a downtrend, the new lower low, and you can then once again just move your fib over and draw it in from the lower high towards the lower low. And then exactly the same process will start again, over again, and you can then once again target the retracement level, and then once again wait for price to hit the -27 or the -618 level. So let's show this in an example. And once again, Bitcoin is the perfect example, and some of you might have already noticed it. But once again, if we have an uptrend, so we draw in the fib from the 1 to the 0. So you have the impulse, the retracement towards the 0.5. You'll see that the minus 27 level gets hit to absolute perfection. So the minus 27 level becomes resistance, and from there onwards, we start retracing back in towards the lows. So let me show you guys another example. On the 4 hour, we, for example, had this downtrend. And what you'll see is that you can draw in your fib from this high to this low over here. So this is the wave on the 4 hour, or the impulse on the 4 hour. And what you'll then see is that the minus 27 level acts as a perfect area for your target. And what you can now see is that from the minus 27 level, we start retracing back up in towards the highs, and we see the trend switch. So those fib extension levels are really perfect for either taking profit or predicting potential areas of reversal within the market. So yeah, that is essentially all it for today, guys. I hope you guys enjoyed this session. If you have any questions whatsoever, please just contact me through Instagram or Discord. The links are in the bio or in the description down below. I hope you guys enjoyed, and I can't wait to see you guys tomorrow. Tomorrow we're going to have a crypto market outlook, so I can't wait to see you then. Thanks, guys.